All right, everyone. We're going to look at Snap stock today. I saw it was trending today. I'm not sure why, so we'll figure that out. So, as always, I like to do a few things. I like to look at the company's latest earnings. I like to look at the current valuation, and then I like to look at other kind of things to consider, whether it's a catalyst, insider transaction, short interest, total outstanding shares, those sorts of things. So, we'll get right into it. So, this was their latest earnings. You can see that their revenue did grow year over year. And we can also see that that cost of revenue, grew about proportionally, but you can see they're spending, about an extra 50 million on research and development. Sales and marketing didn't change at all really, and neither did G&A. So, that's, pretty good revenue growth considering that they only grew the cost of revenue was only an extra 30K about, and the research and development was an extra 50K. So maybe we could look later at why the research and development went up. Actually, we could just check that now. Why did the R&D expense increase for Snap stock on the latest earnings? I'm going to bet it has something to do with AI stuff. Yep, there you go. Spending more on augmented reality, platform, whatever. So that's what is going on there. So that's kind of interesting. Total costs and expenses, and then you can see they have an operating income as opposed to loss from last year, which is good to see. And then you can see interest income is good, but they also have an interest expense that basically takes that away. So this tells me they must have a lot of debt, but also a lot of cash on hand, which is interesting. And then you can see you're getting down to a net income of about 45 million, which is about 0.3 cents earnings per share. So main takeaways from this latest earnings, they're spending more on R&D, and that they did grow their revenue enough to the point where they have positive operating income and a real net income, whereas their earnings from 2024, they did have a positive net income, but it's mainly because of this interest income that they had. So that's interesting. So now we're going to look at their current valuation. I'm going to go to the summary here. Market cap of 9.5 billion. Oh, and then shares outstanding 1.7 billion. So the first thing for me is that, if you're having a company that's not really earning or making money, and then you have a valuation of 9.5 billion to make 50 million last quarter, that's a pretty rich valuation. Which makes me sad to say, don't be tricked just because this price keeps going down. That's a really rich valuation still. The shares outstanding is also very high, 1.7 billion. Normally, you'd like to see it between the shares outstanding between 50 million and 150 million. We can just confirm that. What is the average amount of a, let's actually ask it for a stock that has a market cap of 10 billion. So we'll be specific to Snap here. Yep, sure. Let's see, yeah, so you're looking at 100 to 500 million shares outstanding is kind of where you're going to want to be at. But in general, the lower amount of shares outstanding, the better. So when you see this, and that's why their earnings per share was so low, is because there's so many shares. that you can kind of that the earnings that they do make is being split out amongst all of these different shares. So they have a lot of shares outstanding. So that's something to note. We're going to look at the financials. I want the balance sheet just so I can show you something that's kind of interesting to look at. If you can see here, this current assets is steadily increasing, which is nice, but then you can also see here their long-term debt has also been steadily increasing, which is why they have that weird interest expense and interest payments on their latest earnings. So that is not great to see. I mean, it's good that the current assets have been going up, though. Look at this; they've actually been going down since 2022. See that? Whereas the debt has been steadily, it was flat here, went down a little bit, and it's been kind of going down too. But yeah, they do have quite a bit of debt, so that's worth noting. Just look at their income statement here. Constant revenue growth. Operating expense, though, look at this. This is weird. So in 2022, they had operating expenses grew a lot when compared to the revenue, but they fixed that in 2023, fixed that in 2024, and fixed that in 2025. So they're reining in these operating expenses, which that's great. That's great to see because before they were doing pretty good. Revenue growth, operating expenses grew less. Same thing in 2022, where the revenue grew 46%, operating expenses only grew by 16%. 2021, same thing, but then 2022, this was not good. And now they're kind of back to reining it in. So that's kind of interesting to see. Is there anything else I want to look at here? I think that's the main thing. So my takeaway on that is that valuation. The main thing that's kind of difficult for me to see is this market cap of $9.5 billion for 50 million net income, and then this shares outstanding is really high. We can just ask, have the shares outstanding for over the past 7 years. Yeah, 2019, yeah, so it's been growing. So 20 to 25% dilution over 7 years. So that's good. It's not good, but it's not exploding at least. Stock-based compensation, it's convertible debt, and then they're not really doing buybacks. So okay, so that's interesting. Have insiders been buying Snap stock? Nope, they have not been. What's the other thing I like to look at? I could go to Fintel to see this, but I'll just ask ChatGPT. What is the short? Okay. So it's not there, but it's something. But I would say if you're looking for sort of like short squeeze stuff, you're not going to see it here. And then the last thing that I will ask are, why was um that's not it. AI is good, but it's always has room to get better. All right, news. Nope. Let me see. I could just pull stock twits up on the computer, but I want to look here. Snap. Multi-year partnership with Qualcomm to power next-gen AR hardware, fueling community speculation about a turnaround and push toward long-term profitability. Okay. So partnership with Qualcomm. Yes. Qualcomm. Okay. Multi-year Qualcomm partnership to power AI smart glasses. Okay. So there you go. That's why I was trending. So that could be a thing. Maybe that helps with the turnaround. So there's Snap. If it were me, I'm probably going to stay away just because of the outstanding shares and the 9.5 billion market cap. But if you're in this, I hope that it goes up. It had a really great day today. Maybe that Qualcomm news helps with the turnaround. Better to buy it now than at $8 a couple months ago. So there's something there. But yeah, there's Snap.